Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, with your morning update. It's about 8:45 a.m. Central Time as we open up the markets, look at the early trading that we see this morning. Overall, we're seeing crude oil continue to follow the stock market here of late. It seems like when we see the equities move higher, then we see crude oil move a little bit higher. As we see the equities pull back, we see crude oil pull back. And when we look at those major stock indices, they priced in a lot of negative news. A fear really drove the market following President Trump's reciprocal tariff announcements on April 2nd. That was after the markets closed that day. So we got the real reaction then starting on the 3rd and the 4th and continuing into the following week when the major stock indices fell anywhere from 13 to 16% from where they were at the close on April 2nd. And when I looked earlier this morning, they were down generally 4 to 5% from where they were at the close on April 2nd. So we've recovered a lot of ground. They initially traded a worst case scenario. And once again, a worst case scenario was that we would see these retaliatory tariffs come in and just this continuing escalation that would end up sending our global economy into a recession, decreasing demand for commodities. That's what the market was initially trading. And then we backed off a little bit, and that was aided by the 90-day pause that President Trump initiated for countries who had decided to negotiate rather than to retaliate. And that's basically everybody outside of China, which retaliated. And we've talked previous episodes about how those tariffs went over 100%, and it became a little bit ridiculous because we had far turned off, gotten past the point where we turn off trade by that time, and it was just a tit for tat at that point. Still no indications of negotiations there, but we get back to what the market's trading now. We've had some positive earnings reports that have come out from the major banks here this week, but the market kind of dismissing that to some extent, saying, well, that was first quarter, that was before the tariffs, that's going to get worse now. But still, they're giving President Trump a little bit of grace here. What he needs to see happen, what he needs to produce for us, is some significant trade agreements to show progress now. The White House says 130 countries are in various stages of negotiations with it right now to lower all tariffs. And the other end of that continuum I mentioned, we traded the fear end. Let's say that's the left end of the continuum first. The far right end of the continuum would be where everybody negotiates tariffs down to zero, and we have a global economic boom come out of that, which increases demand for commodities. Now, we're probably not going to be clear at the right hand, probably going to end up somewhere in the middle, but what the market is looking for is actual evidence that we're going to end up further to the right in that continuum than where we were, stimulating more economic growth and more demand for commodities. And the White House could really help the things out with the market if it would produce a trade agreement with, say, Japan or South Korea, one of our major trading partners, and that would help buy some more time and more patience by the markets, I believe. For now, we're consolidating up here. And commodities, as I said, the energy market consolidating in that $60 to $62 area. We've seen OPEC say that they're going to increase output next month by triple what they initially indicated, putting more supply in the market. And our crude oil prices for WTI right now are sitting right at basically the break-even levels for the Permian Basin. And so that's a critical level here that we need to be able to hold, and otherwise we start lowering supplies and we start shifting that supply pie back to OPEC once again. And when we look at the grain and oilseeds, the food-based commodities, they've found more favor among the funds, not sustaining a rally. And it'll go back again on the VIX, talk about the Wall Street's fear index, the VIX. I've observed over the last several decades, whenever the VIX is above 30, it's difficult for any commodity to sustain a rally unless it has a strong story of its own. And we traded above 60 briefly on April 7th, I believe it was, and we probed below 30 last night. We're trading right around that 30 level, even as low as 28 now as I talk to you this morning. So that's a positive. When we look at the grain and oil seeds, so we've seen the most strength in the corn, followed by soybeans, and followed by wheat. All of them are just kind of consolidating, trying not to get ahead of themselves. We don't really have a story yet, but we have potential stories related to relatively tight supplies among major exporters, particularly for corn and wheat, if we get a weather story develop. Now, the odds are higher this year of a weather story than they are in the typical year, but that doesn't mean we will have a story develop. Now, wheat came under pressure yesterday because we do have some good timely rains forecast for really dry areas of the central and southern plains as we get into this weekend. If that doesn't happen, then we have a story start to develop because it goes dry after that again. If it does happen, that buys more time. Speaking of buying time, as we look at the Safrinha corn crop, the winter corn crop in Brazil, that's 75% of their production. That's where their exportable supplies come from. And as we look at it, we're entering the critical pollination stage for that crop right now. And the rains, if you look at the last 60 days of rainfall, it's been the lowest of the last 45 years for that 60-day period of time. But the rains have been timely. They've been more for Mato Grosso than they have been for areas east and to the south. But when I look at the NDVI scores, satellite-based NDVI scores, and that's not an all-end-all to predict yield, but it is an indicator of plant health to some extent. NDVI scores for Mato Grosso do Sul, Paraná, and Goiás, those four provinces account for about 85% of the crop, are the highest that they've been in the records going back to 2001 for mid-April. So that sets a good stage. We just need to see those rains continue into May now in order to have a good crop. As we look at the Midwest, about 4% of the corn crop is planted, a little bit behind normal, not a problem yet. This week will be an active week, and then we have a wet period coming in. And so we're going to have to get as much planted this week as we can where it's safe to do so and soil temperatures are warm enough. But then we'll probably slow down the planting if those forecasts verify, and that's something we're going to have to watch. So anyway, as we start off today, relatively quiet, waiting for some type of a trade agreement to be announced by the White House. But we're mixed on the grain and oil seeds, higher on crude oil. At this time, we've traded both sides. Corn up a penny or two, beans down 9, wheat down 4 to 5 cents. It's been great being with you here again today, and I look forward to returning with you again next time. Thank you.